How can notional value be used for risk management? Have you ever wondered how traders manage the risks associated with options trading? One key concept that plays a big role in this is notional value. So, what exactly is notional value? It represents the total value of the underlying asset controlled by an options position. To calculate it, you multiply the number of contracts by the contract size, which is typically 100 shares per equity option contract, and then by the current price of the underlying asset. This gives you a clear picture of your full exposure, not just the money you invested. Understanding notional value is essential for effective risk management. It helps traders grasp the scale of their market exposure and the potential risks involved. Options allow you to control large amounts of an asset with a smaller initial investment, which can lead to significant gains or losses. By knowing the notional value, you can see the true size of your position and how much price movements could impact your portfolio. One practical way to use notional value for risk management is through position sizing. By understanding your notional exposure, you can size your positions relative to your overall portfolio. For example, you might decide to limit your total notional exposure to a certain percentage of your portfolio value. This helps prevent overexposure to a single stock or sector, keeping your investments balanced and reducing risk. Another important aspect is assessing leverage. When you compare notional value to the capital you have invested, you can see how much leverage you are using. A high notional value relative to your capital indicates higher leverage, which can amplify both potential gains and losses. This information can guide you to adjust your risk accordingly. Brokers and risk managers also use notional value to set margin requirements and monitor compliance with risk limits. This ensures that you maintain enough collateral relative to the size of your positions, which is vital for protecting your investments. Notional value can also be useful for stress testing and scenario analysis. By applying price changes to the full notional amount, you can estimate potential losses during adverse market conditions. This gives you a clearer picture of your risk exposure beyond just the premium you paid for the options. Lastly, notional value allows you to compare risk across different instruments or strategies. By standardizing exposure in terms of the underlying asset value, you can make more informed decisions about where to allocate your capital. In summary, notional value is a fundamental measure in options trading that helps quantify exposure and manage risk. By understanding it, you can make better decisions about position sizing, leverage control, and overall capital allocation. This knowledge helps you avoid unintended large risks and maintain a balanced portfolio.